Hello and welcome to today's webinar. My name is Catherine and I'll be in the background answering any WebEx technical questions. If you experience difficulties during the WebEx session, please dial 1-866-779-3239 or you can message myself, the WebEx producer, Catherine Hegwood, using the Q&A panel. During today's event, all participants will remain in the listen-only mode, and as a reminder, today's call is being recorded. We will hold a Q&A session at the end of today's presentation. We encourage you to submit written questions at any time using the Q&A panel located on the bottom right side of your screen. Please type your questions into the text field and hit send. Please keep the dropdown as all panelists. I would now like to introduce your first speaker for today, Michael Napoli. Michael, you have the floor.
Good afternoon, everyone, and welcome to today's informational webinar on Value Line's options product. My name is Mike Napoli, and I'm one of your senior equity analysts here at Value Line. I'm also one of the representatives of our options team. As we continue to adjust to the post-pandemic business environment, I'd just like to comment on how happy we are to be able to host this live event for you today. I'd like to start by thanking our longtime subscribers to the Value Line Options Survey and welcoming those of you who are new to the service or are considering a subscription. Now, before I jump into the heart of the presentation, for those of you who might be joining us for the first time, I'd just like to provide you with a bit of an overview of who we are here at Value Line. Value Line is an investment research corporation headquartered in New York, and we've been providing information to our subscribers for more than 85 years. Our flagship product is the Value Line Investment Survey, which is a unique service that provides financial information designed to help investors make informed decisions that fit any number of different individual goals at various levels of risk. The product includes data, information, and analysis on more than 1,500 equities that trade on the New York Stock Exchange, the NASDAQ, and the Toronto Stock Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and a lot more. The investment survey is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists, and our research, which is published weekly, is completely unbiased and independent. Unlike a lot of other Wall Street brokerage firms, Value Line has no investment banking business with any company, including those listed in the service. Value Line also does not execute trades for its subscribers, and so we have no vested interest in whether or not our subscribers buy, sell, or hold any specific equity. Also, it's worth noting that none of our staff are professional securities analysts are permitted to own shares of any company that they cover. And now with that said, the presentation is going to be focusing on the Value Line Weekly Option Strategist product, which is a service that is designed to help our subscribers identify attractive option investments, and it's been a part of the family of Value Line products for more than 20 years. On today's call, we're going to be going over the basic outline of the Value Line Option Survey, including the reports that we administer on a weekly basis. We're also going to show you the instructional tools that can be found on our website. And we're going to be taking an in-depth look at our screener, where we'll run a few screens and show you just how useful and flexible this product can be. Throughout the presentation, please feel free to ask questions in the Q&A box that's been provided to you by WebEx. And at the end, we'll try to get to as many as we can. If we're unable to answer your question today, we ask that you forward your inquiries to the options team at vloptions@valueline.com, and we'll do our best to get back to you as quickly as we can. Purchasing or selling options can be a great way to improve your portfolio. They allow investors to take positions in a given equity at a relatively low cost, and they are flexible, presenting you with the opportunity to adjust your existing equity positions to augment your risk and return profile. Options even have the potential to provide superior returns relative to an equity position if they're incorporated with an aggressive strategy in mind. And so we think it's important for strategic investors to have a good working knowledge of options so that they can incorporate them into their respective portfolios. The Value Line Weekly Option Survey provides information and ranks on all regularly listed options. With some variability, this typically includes more than 500,000 options on over 2,900 stocks and closed-end funds. To try and ensure that you have the ability to take advantage of any trading opportunities as they arise, our model is constructed so that it is updated on an hourly basis over the course of the trading day. In order to access the option survey, simply head to valueline.com and sign in with your username and password. Then from the welcome screen, you can click on Options. Located at the top of the Options homepage, you can see our navigational tabs titled Commentary, Screener, Survey Issues, and Resources. The commentary tab is what you're viewing now, and it's essentially our options homepage. It highlights all of the recent editorial content that's been posted to the weekly option survey. And upon scrolling down the page, you can see most of the articles that have been added here over the past week and a half. At the bottom of the page, you can also select any of the given page numbers, and this will allow you to preview past articles that have been posted all the way back to the option survey's inception. Every Monday on this page, you'll find our weekly list of common rank changes. On Tuesdays, it will display our most recent weekly option screen report, as well as a second article that features an option strategy on an individual stock. On Wednesdays, we release our weekly option rank performance page, and on Thursdays, we have our weekly strategist report. The common rank changes report highlights those stocks that have had their common ranks changed over the past week that also have attractive options for any of the 4 primary option strategies. On the site, you can see a few examples of these stocks. Then upon opening the PDF, you can see the full article, which reveals all the stocks that meet these criteria grouped separately into the 4 primary option strategies. Back on the website, we include a list of the featured screens that we use to filter the options. And if you're interested, you can save these screens for your own use later. Moving on to our weekly screen article. This article takes a snapshot in time of the results for a particular strategy that an analyst has deemed attractive, given current market fundamentals, as well as any pertinent geopolitical or macroeconomic factors. This particular report deals with attractive put rights, and it features a short explanation of the current economic backdrop and why it's conducive to the option strategy that's been selected by the analyst. Like the common rank changes article, you can get a fairly in-depth preview of the Value Line website. Then in the attached PDF, you can view a table of the specific screen criteria that was used to generate these results. In this screen, the analyst was seeking out put rights with a delta of between 20 and 40 that offer a minimum amount of protection of 16%. They set a cap on the potential bid-ask spread at 20%, and they're looking for positions that are no more than 5% out of the money. Taking these screening criteria into consideration, you can see all of the results that were generated by taking a look at the table at the bottom of the page. We're going to show you a few more details on the ins and outs of our screener later. But for now, we're going to continue with a background on our weekly reports so that you know exactly what you can expect as a subscriber from us on a weekly basis. So the second of the 2 articles that are typically disseminated on Tuesdays is the option strategy on an individual stock. And in this article, we'll highlight a particular company, discuss its profile as a business, and highlight some specific information like its recent earnings performances and how its stock price has been performing of late. This particular report takes a look at General Motors Company, and it's a covered call report. As you can see, it features all of the company and stock-specific information that we've discussed. And if we scroll down to the bottom of the page, we can see the specific option suggestion that's been made by the analyst in the designated box. Now, in these boxes, call options will appear with an orange header, and put options will appear with a green header. And usually here you can find many of the more pertinent facts about the option. Usually, for your convenience, the analyst will take some of the key statistics from these boxes and highlight them in the article. In this particular case, we've noted that the strike price on the option is $45 and it expires on June 16, 2023. The position is presently about 8% out of the money, and the premium received upon writing the call offers protection of about 5%. Heading back to the options homepage, we can show you our weekly option rank performance article. This article comes out every Wednesday, and it shows the compiled weekly performance of all the options that exist within the Value Line universe that have also been identified by our screeners having attractive characteristics for primary option strategies. In other words, it will display all of the call buys with a rank of 1, all of the call writes with a rank of 5, and so on. The performance metrics that appear here are calculated using the closing prices from Tuesday through Tuesday of the following week, and as you can see on the PDF, it gives a comprehensive breakdown of how each of these strategies performed on an individual basis. On the right-hand side of the page, the PDF also provides the performance of our market-neutral hedges. These are combined strategies that, when put together, create a synthetic position. It's important to be aware of the fact, however, that this article is really meant to highlight the strength of the option ranking system above anything else. We say that because, given the sheer volume involved in calculating some of these performance metrics, as you can see, many feature upwards of tens or even hundreds of thousands of options, it's not entirely practical to replicate the portfolio. With that said, the weekly option rank performance article still highlights the quality of our ranking system and how it can be used to help you build your own portfolio of options. Now, for the last of our weekly articles, we'll provide you with a brief synopsis of the Weekly Strategist Report. This report comes out on Thursdays, and it's typically a little bit more in-depth and educational in nature than some of our other reports that we release throughout the week. We found that utilizing this format helps to explain more of the nuanced elements of the option survey. But these reports also range from strategic topics like hedging your portfolio with options and protecting your assets with options, to more entry-level information targeted at our newer subscribers, like navigating our website and the refresher course on our screener. This week's article, A Dictionary of Option Strategies, provides a clear understanding of all the option strategies that we mentioned in our publication. It highlights the 4 primary option strategies, as well as hedges or combination strategies like spreads and collars. We think all of these weekly articles can be very helpful in keeping you updated on highly ranked options, giving you examples of how we, the analysts, use these tools to generate screens and select potential option positions, and providing you with educational and strategic information that can help you become a more well-rounded investor. Clicking on any of these reports that we've highlighted will also typically lead you to a series of relevant and helpful links and attachments. Now, apart from the articles that the option survey offers, if we move on to the next tab at the top of the home screen, you'll see our option screener. The screener is an extremely customizable tool that operates using updates that take place on an hourly basis, based on prices starting at 10 a.m. and running through the end of the day and the market close at 4 p.m. For newer users, and to make it a little easier to filter results, it caps off the number of options that you're able to select and download to 1,000. But if you prefer an unlimited quantity of options, we also offer an expanded screener, which is located under the Resources tab. We find that tool is typically more useful to experienced investors who are familiar with downloading data and incorporating it into Excel spreadsheets for further filtering. But as for this screener, you can see by scrolling down the page that it also offers a lot of specs that can help you customize your search. At about the halfway point, the first metric that we'd like to show is a section titled Ranks. This section is probably the most important if you want to harness our proprietary ranking system. The option ranking system that we provide is based on 2 items. First is the timeliness rank of the underlying stock. The timeliness ranking system is scaled from 1 to 5, with 1 representing the highest rank and 5 representing the lowest. And so stocks that possess favorable timeliness ranks of 1 or 2 are more likely to be highly rated for bullish option strategies like call buying, covered call writing, and put writing. While stocks that feature unfavorable timeliness ranks of 4 or 5 are more likely to have options that are suitable for bearish strategies like put buying and naked call writing. After taking into account the timeliness rank, our system also determines whether an option appears undervalued or overvalued based on our model's adjusted volatility forecasts. And when you put these statistics together, for example, we can say that an option that appears to be undervalued and is based on a stock with a timeliness rank of 1 is an option that is likely to hold the top option rank for call buying. We'll come back to the rank section in just a minute. But for now, if we scroll back towards the top of the page, we can show you one of the other more general ways that the screener will let you refine your search. Here, under Basic Information, you can simply type in the name of an individual company or index, and it will allow you to search for all of the options that are available. You can also search here by entering in a single ticker or a series of tickers into the designated box. So for example, we're going to type in the tickers for S&P Global, SPGI, and Union Pacific, UNP, here. And upon completing the search, you can see that we found over 1,000 results. This makes sense as we haven't yet filtered out any specific metrics associated with these stocks. But you can do so by heading back to the screener page and making a few adjustments. Let's say we want to conduct a search for these 2 same stocks, but we are only interested in looking at call options, or we only want put options specifically. From the screener, we can make these selections from the list of the preset screens, and this will allow us to refine the search in that way. We can also scroll down to the bottom of the page and select Click here to edit display options. And when the pop-up appears, we can use the drop-down arrow at the bottom of the page to adjust the number of options that are displayed in our results for each of the selected stocks or indexes. Now, if you as an investor aren't targeting any individual equity specifically, you could leave most of the page untouched and just use the preset screens box on its own. This will allow you to choose from the 11 different preset screen options that are shown, including highly ranked stocks that exist in our VLAS 1700 and VLAS small and mid-cap surveys, as well as call options, put options, leaps, which are longer-term options, or any one of our recommended options. To the left, the box marked industry will allow you to select an industry or any number of different industries in which you might like to conduct a search. You can also pair these two search criteria together if you're seeking specific strategies to pursue in a given sector. So, for another example, let's just say we add no data to the screener and we just go ahead and select naked call buying to the list of preset screens. We edit our display options and set our results to show only one option per underlying stock. And then, upon conducting a search, we can see that the screener has yielded 66 results, and this includes companies like Marathon Petroleum Corporation and D.R. Horton Incorporated. Then, if you go back to the screener and look a bit further down the page, you can go back to our 8 ranked selectors, and these will harness our option ranking system and give you option positions based on the selected criteria. For call and put buying, as well as covered call writing and married put buying, options are ranked from 1 to 3, with 1 being a buy or a write, 2 being a hold, and 3 being a rank that signals when to close out the position. On the other hand, for naked call and put writes, options are ranked from 5 to 3, with 5 being a write, 4 being a hold, and 3 being a close. Clicking multiple boxes in any given row can broaden the number of options that meet your criteria. And clicking boxes in different rows will allow the screener to combine common ranks and technical ranks with highly ranked option trades. You can also refine your screens using the additional option information segment of the page. Here, the drop-down arrow shows you more than 45 different criteria for your search, including bid-ask spreads, expiration dates, and percentages in and out of the money. These fields are separated into 5 divisions that focus on covered criteria, information about the underlying stock, margin specifics, the option itself, and the investor's risk tolerance. Also, before you proceed to submit a search, you can click the Edit Display Options link at the bottom of the page that we used earlier to edit the metrics that will be displayed when your results appear. From here, you can simply add or remove columns by highlighting a column criteria and clicking the left or right arrows that separate the boxes titled Available Columns and Displayed Columns. Then, at the bottom of the page, you can also sort your results in advance of the search, or designate a number of options that you want displayed for each individual stock or index. Don't forget to save your display options before clicking OK and closing the box. Putting it all together for the screener, you might find it a little tedious to repeatedly open the page, select the ranks and strategies that you want, and continue to add even more data into the available fields as you scroll down the page. But if you head back to the top, you'll notice that we offer you the opportunity to save screens, and this will allow you to seamlessly access them, to use them repeatedly, or continue working on them if you have started creating a screen but have not yet finished. Once a screen has been saved, simply click Choose File, select Screen, and then click Open to bring it up once again. Moving on to the other tools that the option product offers. If you turn your attention to the left-hand side of the page, you'll find a link to our list of recommended options. This part of the website features lists of highly ranked options for each of the 6 basic strategies, including call buying, naked call writing, covered call writing, married put buying, naked put buying, and naked put writing. These recommended options are typically beneficial to our newer subscribers because they can help create a working knowledge of the primary option strategies, while also offering companies that might seem attractive for option investing. By selecting any of the given option strategies from the drop-down menu and clicking Search, you'll be presented with our top 200 picks for each of these strategies. This program limits the number of options per underlying stock to a maximum of 5 to make sure that you're given a more diverse assortment of selections. Notably, however, one limitation of the recommended options list, and the reason why we say it's really more useful to our newer subscribers, is that it does not take into account any of the investment considerations that are specific to you. These options are highly ranked, but if you wanted to search for highly ranked covered call options that are specifically at least 5% out of the money and expire within the next 30 days, you would have to input that data into our standard screener in order to retrieve those results. Now, with that in mind, we always encourage you to delve deeper into potential investment positions that you've been able to highlight using our screener, just to make sure that the company-specific information that you found matches up with your investment thesis and general suitability. We're going to come back to the screener in just a minute for a bit more of an in-depth explanation. But for now, we just want to take a moment to touch on the remaining tabs that are available on the option homepage. First is the Survey Issues tab, where you can find all of our weekly strategist reports, archived here for educational use. Oftentimes, these reports will highlight a particular investment strategy and dive a bit deeper into its application. These articles can also help you understand what tools the Value Line Options Survey offers, like the screener, how they're used, and how they can be better employed to harness a particular option strategy. Similarly, a lot of other educational offerings can be found under the Resources tab. Most of these links have been long-standing features of the options product, but the educational how-to guides at the top of the list is probably your most useful source of information on how to use the option survey and the various option strategies. It contains a glossary for reference if you're having trouble determining what certain values mean or what acronyms in your results might stand for. It also offers a guide that's titled How to Invest with Options, which contains a number of examples and visuals that can help you better recognize opportunistic investments. Back on the resources page, you can see things like options by stock ticker, which gives you the full option chain of any stock or close-end fund that you enter. We also have the expanded screener, which we discussed before, and we offer some downloadable Excel software as well. We really want to make sure that you're able to harness these tools to help increase your portfolio's return when markets are relatively calm and relieve volatility when levels of uncertainty are high. And so to round this all out, we're going to bring you back to our screener page and put the product into action a bit to show you just how useful it can be. And for some of our newer or potential users, we're going to try and give you some level of comfortability by making sure you can decipher what you're looking at when you finally retrieve your results. Now, typically we find that a lot of our subscribers gravitate towards writing covered calls. For those of you that are completely new to options, the covered call strategy consists of purchasing holdings or maintaining holdings in a particular equity and then writing call options on that same security. The strategy allows you to boost the yield on your overall portfolio during times when upside potential might be limited, or even when you just have a basket of stocks you're holding and want to maintain, but want to use your position to generate immediate income. In the screen that we're loading up for you now, we're looking for rank 1 covered call rights that are based on stocks that have a common rank of 1 or 2. We're going to set our display options to account for 1 result per underlying stock. And under the additional option information section, we're specifying that we're looking for a delta with a minimum of 20 and a maximum of 45. We do this to help make sure that there are no options too far out of the money or too deep into the money. We're also going to add specifications for options that provide protection of at least 2% and a dividend yield of at least 1.5%. So if we implement all of these specifications and proceed to run a search, you can see that the screener yields 66 results. Oh, I'm sorry, 47 results. And if you were to continue to play around with these input figures, you can see how even modest changes in any one given metric can have a fairly strong impact on the output that you're given. So with that said, we're going to go ahead and go back to the screener and introduce a minimum value for the expiration date. In this instance, we'll say about 6 months out, which would be roughly 9/1/2023. Then when we run the search again, we can see that we now end up with 39 results. So clearly the screener can be highly sensitive to the inputs that are given, but it's also highly customizable. So you can search broadly or get very granular to find the options that work well with all different specific strategies. And again, because building accurate screens that meet your preferences may take some tweaking here and there, you can always save your screens for repeated use or come back to make changes to them later. Now that we have our condensed list of options, which meet our parameters for covered calls that have deltas between 20 and 45, offering 2% protection, a 1.5% dividend, and expire no earlier than September 1st of 2023, we can choose one option from the list of results. In this case, we'll select Johnson & Johnson. We then proceed to just tick the box to the left-hand side of the option on the list, head back to the top of the page, and click View Profile. Here you'll see a familiar box that will show some of the relevant data pertaining to this individual option. And again, because it's a covered call option, the header is in orange. So here we are looking at Johnson & Johnson. This call expires on October 20th of 2023. It has a strike price of $165. The company's common stock is currently trading at $156.29, and the per annum yield on the position is currently 9.23%, assuming that another covered call is written right around the same time that the first covered call is scheduled to expire. Some of our more experienced traders will understand this as rolling the call. Now, if we turn our attention to the Johnson & Johnson report in the Value Line Investment Survey, you can see that this commentary largely confirms our outlook. It displays a stock with our highest rank for safety, 1, which also offers solid risk-adjusted total return potential. Earnings appreciation is expected to be noteworthy this year, and the company continues to pay a dividend that exceeds the 1.5% minimum that we highlighted in our screen. Now, it's important to remember that not every screen is going to generate results. It is possible that you can get too specific in your screening criteria, and you could inadvertently eliminate all possibilities. The screener might also yield 0 results when looking for a particular option strategy or a specific company if the stock just doesn't have any attractive options that match up with that particular strategy at a given point in time. In that instance, we suggest that you can check back at a later date or widen your search criteria, and that might help you retrieve some results that are at least close to the criteria that you were looking for. We think that this level of variability is actually one of the primary benefits of the screener process because it allows the product to cater to pretty much any investment preferences that you might have. It's also one of the reasons why we have our weekly posts, so that we can highlight how the screener and the weekly option strategist can be utilized to meet your preferences, whoever you may be. Now, before we conclude this presentation, we'd like to take this opportunity to show you just one more screening strategy that we think can be useful. We've displayed how to generate immediate income on an equity position using a covered call. But what if you simply want to limit the amount of downside risk that you are taking on by holding a particular equity? In this case, you could choose to implement a married put strategy, where you would maintain your existing holdings on the position and then proceed to purchase an at-the-money put option to create a floor should the equity's value fall. Those of you that are new to options trading can view this as similar to purchasing insurance, where even if the stock continues to appreciate in value, you've only increased your break-even point by the value that it costs to purchase the option. Harnessing the married put strategy requires existing holdings. And so, for our example, we're going to pretend that we currently have a position in Target. Target is a stock that currently carries a common rank of 5, so it might be a suitable selection for buying a put. In our screener, we're going to use the stock tickers box that we highlighted before to enter the ticker for Target. Then we're going to use the preset screen box to highlight that we want puts only. Moving down the page, we're going to tick the number 1 next to naked put buyers in the ranks section. This will ensure that we only retrieve the highest ranked put options on Target stock. Finally, we're going to go back into our display options, and we're going to use the drop-down arrow at the bottom of the page to make sure that the screener displays all of the options that are available to us. We save, and then we proceed to conduct our search. And from here, you can see that there are 14 options available with varying strike prices, expiration dates, and costs, depending on the distance in our out of the money and time decay possible relative to the current date. Now, upon selecting an option and proceeding to hit View Profile, at the top of the screen, we can see that because it is a put option, the header shows up in green, and once again, we can see the various statistics associated with the option. As you can see, introducing statistical data into your search and finding options that suit the strategy you want to pursue is a fairly straightforward process. And with that, we're going to conclude this presentation on our options product. For anyone who would like, we can email you our preset screening data and display criteria for the covered call screen that we highlighted today so that you can load them into your screener anytime you want and generate results based on the most up-to-date option pricing information. We also offer preset screen files for all of the primary option strategies. And if you want, you can start off with these base screens and then make adjustments like we did in this example to tailor them to your own preferences. This video will also be made available on Value Line's YouTube channel within the next 48 hours. But for now, I'm going to turn the call over to one of our other senior analysts and representatives of the options team here at Value Line, Rob Scrudato, who's going to be able to answer some of the questions that you've posed throughout the webinar. We really hope you've enjoyed this introduction to the Value Line Option Survey. And once again, if there are any questions that we are unable to get to, we welcome them at vloptions@valueline.com. And we will do our best to make sure that we get back to you in as timely a manner as possible. Go right ahead, Rob.
Okay, thanks, Mike. Yes, this is Rob Scrudato. I'm one of your other senior equity analysts here at Value Line and a member of the options team. I'm going to try and answer some of your questions here, some of which we received before the webinar and some of which were posed today. So the first I'd like to address is from Jerry. Jerry asks, if I have a large equity position that cannot be sold, how can I protect it from a major drop in price? Do you phase in short-term options over different expiration dates, or do you initiate one position and roll it over? So I thought this was a good question, and frankly, both suggestions are viable options. You could potentially purchase naked puts covering the entire position that'll give you the right to sell stock at a set price over a specific period of time. Now, in that instance, the options would increase in value if the price of the underlying went down because they're put options. Of course, this dynamic also creates a trade-off when you're talking about which options you're going to purchase, right? So, for instance, if the underlying stock is trading at $100 and you purchase a put option covering 100 shares with a strike price of $99 at a duration of, say, 3 months, it's going to cost you more than if you purchase an option with a similar duration but with a strike price of $50. So the higher price option is more likely to make you money and offset the drop in the stock, but the lower price one, cheap as it might be, is more likely to expire worthless. Now, obviously, I use this extreme shift in price just to highlight my point, but you could just as easily buy puts at, say, $85. You could also hedge just a portion of the position rather than the entire position. If, for example, you own 1,000 shares of the stock that you're trying to protect, and you could purchase 5 put options, which are going to cover 100 shares each of the stock. And in this case, if the stock price fell sharply, you'd have protection covering 500 shares of the underlying company that would help to offset the losses of the position. So both of these tactics can be used as an insurance policy. It really depends how much you want to spend and how much protection you want to receive. Also, you should note that 3-month options, like I've described in these examples, are going to be cheaper than 6-month options or 1-year put options because there's a longer amount of time available for the price to drop and for the positions to move into the money. So for our next question, we had one from Mary, and Mary asks, is it a viable strategy to use options as a speculative tool instead of as a tool to hedge against losses? So absolutely. If you like a stock and you want to take advantage of the leverage that you can gain by using options to take a bullish position, then you might want to use naked calls to take these a speculative position on future growth. Just make sure that you're comfortable with the level of risk that's taken by leveraging the position. So a call option will give you the right to purchase 100 shares of a stock at a set price for a set period of time, whether it's 3 months, 6 months, up to 2 years. And it could be significantly less expensive than buying the underlying stock itself. But of course, if the stock price doesn't exceed the strike price before the option expires, you're going to be left with nothing. Whereas if you bought the underlying stock itself, you would still own the shares and you would have still likely reaped some of the benefits of the underlying growth that took place beneath the expiration, the strike price. Gene asks, where can I learn more about option investing as a whole? So to learn more about option investing, you could look at our How to Invest Using Options guide that Mike touched on earlier. If you start on the options homepage, you can click on Investment Education, Tool Guides, and then when you scroll to the bottom of the page, select the Value Line Option Survey, and you can find that guide there. You can also find it by accessing the options, going from the options homepage and going to the Resources tab, and there we also have some other educational how-to guidelines as well. Let's see. Luis asks, how can I replicate the results in the weekly option rank performance? So I wanted to address this one because it's a question that we get pretty often. And it's also why we made a point to highlight it in our presentation today. So we look at options as a tool to add to your existing investment practices rather than a tradable portfolio, right? When considering that a single stock, like say Microsoft, has more than 1,500 options that trade using various strike prices and expiration dates, it's easy to see that the option market has incredible depth and volume to it, right? So this is also evident when you consider our program processes pricing data on hundreds of thousands of options within the value line universe. So to be able to purchase a basket of options that would index the entire market would not only be challenging to do, it would be incredibly expensive. So, but we do like to note that the weekly option rank performance is the best way that we can highlight to you the strength of our timeliness ranking system, along with our option screener and how you can use those tools to help you better reach your investment goals. So let me get to another one here. Barry asks, I plan to use covered calls to supplement income. If a trade goes bad, so to speak, the underlying stock significantly decreases in price and I'd like to get out, or the stock significantly increases in price and I want to keep the stock, what is the best way to exit the options trade and what does that look like? So if the trade goes bad and the underlying decreases significantly, we could say that you would simply sell the underlying stock with your broker like normal, right? And then depending on how long the call option has remaining until expiration, you can do the same, or you can simply wait it out if you think there's a possibility that it's going to increase in value. And if not, it will just expire and you will lose the cost that it took to purchase that option. As far as if the stock price increases significantly and you want to keep it, you could then proceed to write calls that are further out of the money and above the current trading price, and the premium might not be as large, but will also help maximize the likelihood that the stock will be called away. So the duration or time to expiration will be another variable in this equation, depending on your outlook on the individual company and the level of volatility that the equity trades with. You can write shorter calls or longer ones. The longer ones will have a larger premium to compensate for the time value of the option, but they're also going to carry a greater risk that the stock will trade above the strike and then they're going to get called away. I think that's about all the time we have for questions, but before we leave you today, we did want to offer you all one option recommendation. Now, as always, we encourage our subscribers and any potential subscribers out there to strongly consider their own investment goals and risk tolerances before acting on any transactions. But the call buy that we thought that looked attractive today is this June 16th $85 call on Charles Schwab Corporation. Schwab currently carries our highest rank for timeliness, and at the time of this recommendation was clipped today, the position was about 6% out of the money. There are options available that are further out of the money or closer to in the money if you want to adjust the premium that you might want to pay to purchase the option. However, there's plenty of open interest here, and according to our adjusted volatility forecasts, this option is presently very much undervalued. So with that, allow me to thank you again very much for joining us on today's webinar. As Mike said, the entire presentation is going to be made available to you guys on our YouTube channel within the next 48 hours. And again, if you have any questions at all, please feel free to forward them to vloptions@valueline.com. Thank you all very much again for coming today, and have a great day.
You may now disconnect your lines and have a great rest of your day. Thank you.
Mhm.